What's going on, everybody? This is Trading G's with G. Listen to the Dreadheaded Trader with a grain of black salt. Do your own DD. Do your own due diligence. Be your own designated driver. You cannot trust anything I say 100%. Know I have your best interest and I always keep it 100. Alright, y'all. This video is going to be on AVGO, aka BRAODCOM. It's one of the biggest semiconductor companies in the whole world. For those of you who need more insight or any type of information on that, please check out my previous AVGO BRAODCOM video that I did last summer. It was mainly covering the 10-1 stock split, and I was explaining what the company is about. So a basic high school student getting an F, sleeping in the back of a chemistry class can understand what I'm talking about. Please check out that video. It has 240 views up to date. It's my second most viewed video. So I'm going to get into it. Currently, I have 4 out the money calls, $370 calls that expire July 18th. I purchased 2 of them right here on June 2nd. They're only $26 each. Then I bought 1 more call on June 9th right over here for $16. So after earnings, this purple line is the earnings date. AVGO started declining, so I bought the dip. And I bought my last call just this past Friday right over here for $9. So in total, I spent only $77 for 4 calls. The chances of this hitting $370 is definitely not common. It's the line right here, obviously, right? So the reason why I bought it so far out the money is because at the time earnings was coming up, as you can see, it started hiking. 3 green candlesticks, pretty much 3 white soldiers formation, right? I messed up. I could have sold my first 2 calls prior to earnings. They were up $36 each. I could have hit for $72, being over $100 out the money, buying at around $250. Right over here is my strike price at $248.22. Excuse my entry price. My bad, y'all. And I messed up. I wanted to gamble earnings. I got a little greedy. I was hoping it was going to shoot up here, but it reached a new all-time high right around that time at $265.43. And ever since then, it's escaped out of this long bullish trend that's been going on really ever since April, right when the tariff started with that big old dip in the market. So it broke out of here. I was hoping it wasn't going to bust down too low because 238.47 was going to be my exit. The previous all-time high was December 16, 2024, and it hit for 251.88. So obviously I got in at the perfect time, right before the all-time high and the peaked. So I still have about a month left before this contract expires, and the volume has gone down drastically since earnings. So I just want y'all to know that you're not going to win every trade, and you have to put what you're willing to lose down. I could have easily walked out with this money, but I got greedy. I even could have took one contract and held the other one. That's another type of strategy I do. Sell some when it hits a certain trend line or resistance line, but it's all good. But what am I looking at here? Consolidation. So you got 2 green candlesticks last Wednesday over here, and you have like a red hammer, a green topping hammer, a red hammer. So if it goes down below 241.11, you know this is gonna most likely come back down. But if it can get past its previous all-time high right over here, if it can stay above this, that's great news for me. If it can hit this all-time high again, since the volume's down so bad, I'll probably barely be up on profit, or I might barely be trailing, and I might make back some of my money with the cheaper calls that I bought and dip at 16.9 bucks. I might even out, but who knows? I'm just gonna hold on to it. I'm not gonna exit this position because 77 bucks ain't really anything to me. It's very low risk for me, high reward. So on Friday, day after Juneteenth, shout out to all my brothers and sisters out there. So Friday, June 20th, the ex-dividend date for this stock is a deadline. So if you're a long-term holder, if you want to become a long-term holder and receive a dividend payout every quarter, every 3 months, 4 times out the year, you have to buy any stock before this ex-dividend date. So if you don't have any of this AVGO stock by Friday, you're not going to get paid 59 cents per share. And you're going to get paid on June 30th if you have all your shares in hold up until this date, but you should be trying to hold long term if you're really an investor. So, my bad, right over here. So, don't get confused over here. If you look at this history, this is still climbing. The only reason why this tanked is because of the 10-1 stock split. So, if you times 53 cents by 10, this is $5.30, and currently they pay 59 cents, like I said. So we times that by 10, you get $5.90. So basically, for every 10 AVGO shares that you hold, you are still getting the same dividend payout. They are still growing their dividend. So just don't get confused with that, y'all. From a long-term investors and new investors to the game. I'm gonna just go over some facts about what happened with their earnings. So their balance sheet looks really good. They got 9.47 billion cash on hand. That's excellent for a company of this magnitude. And their total assets is right at 164 billion. As you can see, it's very balanced over the past 5 quarters, including this current one that just ended. They only have 95 billion in total liabilities, and they actually have shareholder equity of $164 billion. So people who doubt this company don't know what they're talking about, because like I mentioned in the last video, literally this semiconductor company is the reason why like the Magnificent Seven are even alive, because you need semiconductors for tech. But yeah, over here is just a slight look at their income statement, and their sales revenue hit $15 billion. So over the last 5 quarters, dating back to April 2024, they have been dramatically improving on their sales revenue, and their net income is still right below 5 billion, 4.97. And you can see that they've been improving pretty much overall over the course of the last 5 quarters, despite this big drop of negative 167.5% on net income growth. But ever since then, they've been killing it, and it slightly went down 9.78% this quarter. So overall, this company is here to stay. It's not going anywhere. All right, so if you look over here, this is the at the money calls right over here. And as you can see, it's not cheap to trade this company. So as of today, if you're going to get in like right over here, right in the money, you're going to drop by 400 at the closest. And if you're going to get out the money, you're going to drop 273. This is if you're day trading, y'all. What I showed you was obviously a swing trading chart. That was a daily that I showed y'all. So if I do day trade this tomorrow, it should be volatile, the whole market tomorrow, because the Fed is going to go over some numbers. I think about unemployment or something. And then it's the day before a national holiday, which is Juneteenth. So today the market was flat. I expected to pump tomorrow up or down. So if anything, I might get in over here at a 255, maybe 171 if I'm feeling good. So I just want people to really know that you don't have to necessarily day trade or swing trade slightly in or out the money. Like you can choke up and go way out the money like I do on a regular basis because it's safer as long as you know your Greeks and your numbers, which I've been mastering my strategy. You should be good. But good luck to everybody out there trading, and check out my last video on BRAODCOM. Until next time, this is Trading G's with G. I'm out.